Do you want to reduce your energy bills? Or maybe you want to use greener energy? Go solar and get a discount. Right now, Which members can get a 7.5% discount on solar panels and their installation if you use Heatable, a Which Trusted Trader approved service. You can also include a storage battery and EV charger, handy if you're looking at making the switch to an electric car. To make use of this exclusive offer, simply head to which.co.uk/solar-offer. That's which.co.uk/solar-offer before the 30th of September 2025. And if you're not already a Which member, you can grab a year's membership for 50% off the usual price. To do that, go to which.co.uk/podcast offer to get involved. Start your solar journey today. Go solar and get a discount with Which.
From Bitcoin to blockchain, should crypto form part of your investment portfolio, or is it a fad to stay clear of? Welcome to Which Money. Welcome to our crypto special. Today we'll be breaking down the basics and busting myths, covering what it is, how to access it, the risks, and I'm sure plenty more along the way. And with me today we have Josh Wilson, Which investment expert. Hello, Josh.
Hi there. Pleasure to be here.
Pleasure to have you back. And also a new voice for the show, Richard Daws, founder and CEO of Redefind crypto insurance company. Hello, Richard.
Hi, great to meet you both.
So good to have you both on the show today. Well, shall we start from the top then? You know, in a nutshell, what are the basics of crypto? Josh, do you want to start us off?
Yeah, of course. So cryptocurrency is essentially, it's a form of currency, sort of, that isn't controlled by any country or central bank. They're generally stored in what's known as virtual wallets online, which they're usually a website or a mobile phone app. There are several different types. The most well-known is Bitcoin. Mm-hmm. Richard, would you like to take us onwards?
Yeah, sure. I mean, obviously, Bitcoin is the most well-known. It's been around for a long time. What we've seen over the last 15 years is development in other cryptocurrencies as well coming along the way. And I think, from an investor's perspective, it's important that people have more line of sight than just Bitcoin. So excited to dive into that with you as well.
And you mentioned that it's not owned by a central bank. So that's one of the ways it's different to physical cash. How else does it differ from, shall we say, real money?
So I would say one of the key differences between cryptocurrency and more traditional currency, as well as the fact that it's not backed by a traditional central bank, is that a traditional currency is often treated as a store of value over usually a period of time, a period of years. Now, obviously, cryptocurrencies can be used for that, but because they tend to be relatively volatile in terms of price, that makes them of questionable use as a store of value. So I would say that is one way that they differ from traditional currency. And there are others as well. I think another big one is that traditional currencies are also used as a form of exchange. If you want to buy a car, groceries, things like that, you can use traditional currency. But if you want to use a cryptocurrency, we're still, even though some places now are starting to accept cryptocurrencies, we were talking about that earlier, most places still won't accept a cryptocurrency as a medium of exchange.
Is there anything that you'd add to that, Richard? It all feels quite lofty at the moment, doesn't it?
I think that's a good observation. I think there's been a lot of really good work done over the last probably 7 to 8 years by the crypto community in terms of bringing something that's been a very speculative asset into more of the mainstream. I think the interesting thing about crypto and the ethos of crypto is that it's something that's outside of centralized control. So it gives people the ability to make financial decisions, or we're seeing more so now, access to financial instruments and products that perhaps they might not necessarily otherwise have access to.
For example?
So we're seeing, literally this year, we're starting to see now more tokenization of traditional investment products that perhaps wouldn't be accessible to everybody other than ultra high net worth individuals. And that's being accessed through the cryptocurrency ecosystem, in particular through stablecoins. And that's something that's growing, particularly in the US, but more and more so in the UK.
There's a lot from what you're saying that I could pick out. Tokenization, what is that for anyone who's not familiar?
Yeah, so tokenization really is bringing a digital representation of the asset onto the blockchain. So that could be a currency sat on blockchain, which obviously represents value, as Josh mentioned. In some instances, it could be tokenized fractionalization of hard assets. So over the past few years, we've seen attempts at fractionalized ownership of real estate or art collections. The real emphasis now at the moment is around tokenization of existing financial instruments. So if you imagine some of the bond products that might be available to institutions or high net worth individuals, and not just in the Western world, but in the East as well, it's been very difficult to access these products over time, through traditional finance, ultimately. What tokenization of these products, which are getting labeled as real-world assets, is bringing is that accessibility. So as complex financial instruments become more available to private individuals, and I think when we're facing difficult financial circumstances still with interest rate, some of these products are becoming more attractive but previously very difficult to access.
And before we move on, just to rewind slightly again, blockchain, what does that mean for anyone again who's not familiar with it?
So blockchain at its heart is a ledger or a database of information. It's built in a decentralized manner, which means it's not under an undue control of any one party, which is where the whole ethos of decentralized and decentralized finance community came from. But ultimately, it's a record that is available publicly that can be held to account as being factually accurate by a consensus mechanism.
Well, let's bring it back to maybe some, I want to say more tangible, but I'm not even really sure if it will ever be more tangible. Bitcoin, we've mentioned it already. What other ones would you like to bring up, kind of the most popular ones at this point?
I think it's worth, because you mentioned stablecoin before, and I think it is worth talking a little bit about stablecoin and how that's different from more traditional cryptocurrency. So stablecoin, the point of it is that it's pegged to a more traditional currency, for example, the dollar. And the reason that that's done with stablecoin is it's supposed to, as the name might imply, make the currency more stable and less volatile. Now, this may or may not work in practice. One of the issues with stablecoin is that there is debate about whether the suppliers of stablecoin actually have enough of it to ever protect against, let's say, a run on stablecoin, or if there was ever any issues with stablecoin or a crash of the exchanges that trade in stablecoin. There are questions around whether there are actually enough stablecoins being held to protect against something like that. But in theory, they should be less volatile than more traditional cryptocurrencies like Ethereum and Bitcoin.
Yeah, you make a good point. I mean, stablecoins really are designed as a utility mechanism to be able to allow people to transact in a digital world. I think one of the interesting things that's coming through now around stablecoins is the accessibility from, less so for us in the UK, but in more exotic currencies, accessing US dollars can be difficult. And also when you look at clearing and banks for settlements from different currencies, that digital stablecoin rail speeds up transactions times, which delivers fairer finance for everybody. But ultimately, the stablecoin isn't an investment asset. It's never going to go from $1 to $10. It's always going to be pegged or kept at that dollar valuation.
Well, shall we start to get into then how you might even begin to start accessing crypto? Where would you start?
Well, for our listeners, I would say don't worry too much about the mining side of things. That's for IT professionals. Focus more on the buying and selling of existing cryptocurrencies. So there are a few different ways you can do it. The main one is you would purchase it through what's known as an online cryptocurrency exchange, which, correct me if I'm wrong, but this is where this is where the trading goes on, the buying and the selling. So there are a number of them available. Some of the more well-known ones are Coinbase, Coin Corner, and Kraken. It's also worth stating that cryptocurrencies are largely unregulated by the Financial Conduct Authority in the UK. And currently you can't hold crypto in a stocks and shares ISA. So there's no recourse for, say, getting your money back through something like the FCA or the FSCS, or complaining to the Ombudsman if, say, the cryptocurrency exchange where you have bought and stored your cryptocurrency, if that fails and you lose all your money, there's no protections in place there.
And we will be getting into all of the risks and words of caution as we go through the show as well. I mean, is there anything that you'd add to that, kind of first steps for anyone listening? Because it does seem like quite a kind of minefield.
Yeah, I completely agree. I think the first step is really to do your research. I think it's something for somebody that's not been in crypto over the last 10 years is something that shouldn't be necessarily jumped on lightly. There's some really good research out there now, and I think it's really interesting that you guys are giving coverage to this as to what should people do, and we'll touch later a little bit, I think, on what perhaps people shouldn't do. I would absolutely suggest people do research, and I would look
I'll second that.
I would also look at, Joss mentions exchanges, which is the perfect place to start. There are other ways that you can store your crypto, but perhaps for somebody brand new, talking about self-custody is possibly not for today. But I would also look for those exchanges that have FCA permissions. So although the FCA aren't regulating crypto directly at the moment, they are putting regulation to how the services are marketed. And so I would recommend looking for the exchanges that comply with those regulations. And, fortunately now in 2025, there's a lot of information around. There's a lot of exchanges, that certainly the bigger and better known exchanges in the UK really are doing some great things. So there's a good way in now. It's not as crazy as it used to be. And I think another great thing that move to regulation has brought in has been that approach and balance to risk when you're buying a cryptocurrency. So, for example, if you were to open any of the top exchange accounts tomorrow, it wouldn't just be a case of shifting in £100 and it turning into Bitcoin or whatever it might be. It will take you through a series of questions which people help stop and think about what they're doing and whether it's the right asset for them, and also to which degree. I think like any asset, you probably shouldn't be ploughing 100% of your net worth into something. And a lot of the work that's been done by exchanges has brought that thought process to life through a series of onboarding questions, which has made the ecosystem a little bit more grown up, I guess.
I'm also going to shamelessly plug our witch guides. We have a few of them on cryptocurrency,
There's no shame in that.
which is a great place to get started as well. Oh, it's also worth mentioning, I think it's important to point out that tax may still be due on cryptocurrency. For example, you'll have to pay capital gains tax. If you invest in cryptocurrency and the value increases, you may be liable for CGT.
Yep, and we can pop a link to some of those in the description of today's show. And I should say we are talking about, buying crypto in terms of investing, because as we were talking about off air, I think you mentioned Josh, earlier, when people aren't really using it for buying things at the moment, are they? Although you can.
You can. And I think there's quite a polarization if you look, outside of the Western world. There's a lot more uptake of digital currencies as a payment mechanism. This is something that is expanding over time. So the uptake, I think we're a long way away from going to Waitrose and buying your groceries in Bitcoin. But there are people that are accepting digital currencies. I think you mentioned earlier Tesla and some others in some ways, shapes or forms. And it can be used to access other financial products. But it's not got the utility of pound sterling at the moment.
Now, before we kind of get into some of the things you shouldn't do, as you mentioned, and more of the risks, can we talk about whether it's something that you actually think people should do? Richard, should people be investing in crypto, do you think?
I don't want to give anybody investment advice because I'm not qualified to do so, but my view really is that people should be looking at asset portfolio right across the piece. And cryptocurrency as being an alternative asset, I think should be on people's consideration for sure.
And are there any types of crypto that are, kind of becoming quite popular at the moment that people are talking about, that are getting quite a lot of attention?
There are. I mean, crypto is an interesting space. In some ways, it's quite polarized. I think, mainstream press report a lot about crypto, and you see everything from, stable coins or Bitcoin, which is quite grown up, reasonably well established, right the way through to some of the horror stories that have been seen around meme coins. And perhaps the most recent one was Donald Trump coin, and quite what was behind that. There's an awful lot of speculation around. But I think it's something that people should be seriously considering now as we move forward.
And are people considering it? Has the appetite for crypto grown, would you say, in your experience?
Enormously. So the statistics are quite difficult to unfathom. We can take numbers from the FCA and we can also look at global users. It's estimated this year that 1 billion users globally for cryptocurrencies, obviously not all within the UK. And the last data that we've seen about UK ownership is somewhere approaching 20% of UK individuals own crypto. So it's something that is attracting attention. Of course, it's difficult to know quite who owns what, of course, the beauty of it being decentralized, but it is more mainstream than perhaps a lot of people might realize.
And Josh, over to you now. I'm sure you've kind of been dying to give this opinion, but what is your opinion and the Which perspective on crypto?
Well, I do think it's important. We've talked about some of the benefits and the pros of cryptocurrency. I think it is also important to talk about the risks and some of the downsides. So obviously we talked about cryptocurrency as a currency. Now I'm going to talk a bit about it as a commodity and as a potential investment vehicle. So again, as we mentioned before, cryptocurrency has a tendency to be incredibly volatile. There have been recorded instances of cryptocurrencies like Ethereum and Bitcoin doubling in value in the space of a few days, halving in value in the space of a few days. That's a lot of volatility and a lot of risk. You won't generally see if you were to invest in something like a FTSE 100 tracker or an S&P 500 tracker, you're not going to see that kind of volatility unless the entire global market is crashing around our ears. I think it's also important to point out that if you're treating cryptocurrency as a commodity, like gold, cryptocurrency has no real world value. It's not, one of the reasons that gold is able to hold its value and why investors treat gold as the store of value that they do. Gold does have real world applications. It's used in high-end electronics, and that is part of what helps it retain its value. There's a lot of experts out there essentially think that cryptocurrency is nothing more than fake internet points. It's not real. So I think you do have to bear that in mind if it's something that you are thinking of investing in. There are also been recorded instances of what essentially boils down to pump and dump schemes, which is where a group of speculators create a new cryptocurrency. They generate a lot of hype around it. They either get a famous person or they say a famous person is invested in it. They'll drive the value up, and then when the value is very high, they'll sell all their holdings in it, and all the new people who got essentially tricked into investing in it lose all the money that they invested in it. So it's dangerous. It is dangerous. There are risks. So you do need to be aware of this stuff.
And Richard, you've been nodding as Josh was saying all that. I feel like you've seen some horror stories.
Yeah, I agree with Josh. I think any unregulated alternative asset needs really careful consideration. I think the observation I would make is that pump and dump events, schemes, scams of all forms have been around for a very, very long time. And it's not something, sadly, that is unique to crypto world. But it really does need careful consideration, and people need to look to mitigate the risks so much as possible. I think as well, if we look at crypto now and literally now, as opposed to even 12, 18, 24 months away, the ecosystem is a lot more grown up, a lot more established. And you're quite right, some of the rug pulls, as they get called, or pump and dump schemes, they're a very small minority. It tend to be in a small DeFi sector of crypto, which is not where the mainstream and where I would imagine which users would generally gravitate towards. It tends to be very kind of very, very high risk, very speculative coins that will launch at 1 cent, be worth $500 and then nothing, before anybody else has even bought them.
Yep, that's true. That's true. I will go back to what I said before, though, about the cryptocurrencies not having real world value or application. That does go for all cryptocurrencies. And the one last thing I will say is that if you as an investor go and buy, let's say, a share of Tesco, you legally own a portion of Tesco. You are a legal owner of a part of that company. The same is not true when you invest in cryptocurrency.
It is quite a lot to get your head around, isn't it? Shall we touch on some of the should nots, the things that you shouldn't do that's kind of come up as we've been going through? Richard, do you want to start us off?
Sure. I mean, I think the biggest exposure that we see and have seen over the last year is, unfortunately, again, is not a cryptocurrency headache, but it's the issue around social engineering. I think there's a lot of hygiene that needs to be brought into people, how people interact with the internet broadly, of assets of all forms. And we're seeing more recently, increasingly, more and more sophisticated messaging, clever cloning, and so on and so forth, seeking to remove or deprive people of their crypto assets. I think the first thing that people need to consider, particularly when they're new, is be very aware of be very cynical towards the messaging that comes through. One of the messages in crypto from a very long time ago was trust but verify, meaning that although you should be open-minded to things that are put towards you in the crypto space, you should absolutely make sure that they are true and they are genuine. Without boring you with numbers, but roughly $10 billion was stolen through crypto theft last year. Not in the UK, thankfully, globally. But even then, 85% of that figure is a result of social engineering of some form or another. And that could be something from somebody even launching God forbid, a witch-branded crypto exchange tomorrow, which was nothing to do with you guys at all, but in an effort to solicit people towards a trusted brand. Or at the more ridiculous scale, there's been a number of stories through social media where people believe that high-profile members of the entertainment industry, they're long lost to love, and therefore they should be sent money to pay for a kidney transplant, which we'd like to hope that people would not necessarily fall for, but that's probably the biggest risk that we see. Other than that, I think really it's very much good cyber hygiene. So always make sure that you're using a good, credible malware piece of software. Use a VPN if you're using public Wi-Fi. And really exercise good cyber hygiene, same way as you would to protect your online banking account, really.
Yeah, and where possible, do card payments rather than bank transfers, because there are better protections in place for card payments.
I suppose credit cards, if you had the choice.
Yes, yeah, indeed.
Though I did read something about, I'm sure I saw a figure researching for today's show saying that there was a small fraction of people buying crypto using credit cards, I suppose without not doing it for the protections, but doing it to use the money on the credit card, which is something that we would not recommend.
No, certainly not. Don't put yourself into debt to buy. We would say that of any investment, whether you're buying shares, bonds, or crypto. You should only ever be investing what you can afford to invest, what you can afford to lose, essentially. Never put yourself in debt.
So something else that other people should be aware of as well, if they're unfortunate for something bad to go wrong in the crypto space, we have seen in certain instances where people have put messages out into groups saying, help, I've had my crypto stolen. And there are scenarios where bad actors, potentially connected to the original people that have stolen digital assets, will contact them again with a view to taking more money for them to search and recover the stolen digital assets. That's something that people should be very aware of.
I mean, we've talked about it not being FCA regulated. So in these scenarios, what can you do? Is there anything that you can do to protect yourself?
There are. I mean, there are remedies that are available either before the event or after the event. I mean, Redefind is addressing this scenario actually directly by being the first FCA regulated insurance provider. If somebody has an event and they don't have an insurance policy, they can contact potentially their lawyer or their accountant and ask for the next steps. I will be really, really clear here to make sure that the people that are giving them advice for crypto asset recovery do need to be experts. I don't think that you will go to just a general lawyer or a general accountant, but they should be able to find the right people to put you in touch with to make sure that that matter can be addressed. I think always report any financial loss to law enforcement. Also, the CFAR data recovery protection, credit reference protection agency are a really good place to go to. So there are mechanisms that can be done. But again, people need to be mindful, like any cyber type loss, that once their defences have been breached, quite often their information is out there, not just for people that are trying to help, but actually trying to create further harm as well.
Well, shall we get into some of that stuff then? The things that if you are still considering it after all the stuff we've talked about today, what you can do to protect yourself. So where would you start?
One of the main things to do is, as Richard said earlier, make sure if you are buying and selling, go through one of these crypto exchanges that has been vetted by the FCA to some degree. Make sure that you are aware that there are these fake adverts online, often from scammers who say that they've got these celebrity endorsements, get rich quick schemes. Be very aware of anything like that. Anybody who sends you a direct message on social media who's trying to get you to, if you already have cryptocurrency, who are telling you, that you need to send them your information, anything like that, be very, very wary of.
I think that's a good point. Something else that we've noticed a lot, which happens through social media, is, and particularly with Facebook accounts, is where people are getting hacked. Mm-hmm. So if, for example, you find that all of a sudden one of your friends on Facebook who is nothing to do with finance or
I've seen
tech
that many
at all,
times. I know what you're going to say.
Yeah, all of a sudden they say, hey, I've made £100,000 trading Bitcoin over the weekend. And just a cursory glance will tell you that Bitcoin hadn't moved that weekend. There's a lot of social media profile and accounts being hacked and being used with stories that fortunately are still reasonably ridiculous. But your friend Jim from the local garage that's never spoken to you about crypto before, suddenly posting that all over Facebook, it's reasonably unlikely it's actually going to be him.
Yeah.
Don't just invest in a cryptocurrency that you've never heard of without doing your research first. 100% do your research, look into it. Definitely.
And is there a percentage of your portfolio that's kind of recommended for I suppose, crypto or other such high risk?
I wouldn't like to make that recommendation.
I think it's really difficult to recommend. It depends on people's circumstances and what they're trying to achieve. Yeah. Josh makes a really good point about volatility as well. So really people need to think about what they're trying to do over what period of time, what their achievements and ambitions for all investments are, not just crypto. I
mean, my point was if there was a recommended percentage, it would be small, potentially, because you don't want to...
I mean, I always advocate for a highly diversified portfolio. I think that's one of the key things for any investor that they should be aiming for, and that's a good balance of different asset classes, which could include cryptocurrency and also things like bonds, shares, government bonds and gilts. They're a good one to include, and also from a range of geographies as well is often good. So not just all shares from the FTSE 100. You could mix in stuff from the S&P 500, America, some European shares. That's always a great way of diversifying your portfolio. So I think that really is key. If you do your research, it can be fine to include some crypto in your portfolio. You certainly don't want to go all in on it.
Well, we've covered a lot today, a lot of ground. Before we wrap up, I mean, is there anything that you'd like to stress that we've already mentioned, or anything we haven't touched on that we really should give a mention?
Do your research, and I would say as well, if you want more information on this subject, I can highly recommend the economists Richard J. Murphy and Gary Stevenson. They've got some very good work out there on crypto.
Great. And I think from me, my advice, like I say, would do your own research, but also, make sure that you go into everything with an open mind and stay safe and just be cautious.
Well, thank you both so much for joining us today.
Pleasure. Thank you.
Thanks for listening to this podcast from Which, the UK's consumer champion. You can find plenty more advice about what we discussed today in the show notes. There you'll also find a link to become a Which member for 50% off the usual price, an offer exclusively available to you, our podcast listeners. Joining Which will not only give you access to our product reviews, our app, one-to-one personalised buying advice, and every issue of Which magazine across the year, but you'll also be helping us to make life simpler, fairer and safer for everyone. Don't forget to hit subscribe wherever you're listening. That way you'll be notified whenever we release a new episode of Which Money, Which Shorts, or any other podcast that we make for you. And if you want to get in touch with us, then follow us on social media at Which UK or drop us an email to podcast@which.co.uk. See you next time.
If you're enjoying this podcast from us here at Which, then why not become a Which member? Right now, we've got a special offer, especially for podcast listeners, meaning you can choose any of our 3 membership tiers for 50% off the usual price. Starting at just £39.50 for a full year, you can get Which magazine delivered direct to your door. For the same price, you could also choose a digital Which subscription, giving you access to all of our product reviews, the Which app, and the digital edition of Which magazine. What's more, you'll also be able to use the Ask Which service for personalised one-to-one buying advice. Or why not get a full access Which subscription for just £49.50 for a full year? Don't forget, that's 50% off the usual price. To join Which or to find out more, just head to which.co.uk/podcast offer. That's which.co.uk/podcast offer, or click the link in the description for today's podcast for 50% off a Which annual subscription.